Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's update our unit gold market. So you can see gold market was behaving a bit differently compared to euro currency and British pound. The currencies actually have shown proper reaction on the CPI numbers, while on the gold market we see different action yesterday. But this different action is not because of the different reaction on the CPI. This is just because of the news releases. Once again, it's about geopolitics. And as it was announced that United States and Israel have discussed the strike on oil objects in Iran. It was discussion of the particular target, so direct discussion of the plan, and that explains that, at least it explains why in the media why the gold market shows this reaction. So it means that actually the political situation doesn't let gold market to relax, and traders use any reason to justify new purchases on the gold market. So you can see even some minor changes in geopolitical topics triggers a reaction. So in fact, intraday momentum right now stands bullish on the gold market. We see the upside reaction right from the 26 area. Market has formed bullish reversal session yesterday, so it's quite different compared to the euro that we have discussed in the previous video and in the gold on the Great British pound. So for now, since overall trend stands bearish, we actually was waiting for this upside pullback. And now we could see what will happen around the resistance area that market has reached. So on the 4-hour time frame chart, you can see that market actually stands around 2640, 2650. This reminds me the situation that we have discussed on the Bitcoin market last week. It was absolutely the same story. Market has reached to trend line and 618 resistance area. Conclusion is classical. So to confirm the bullish ambitions, market has to break it up and keep going higher. If this will happen, the market will move above the 2640, 2650 resistance. The chances on the bullish continuation back to the top, or at least challenging of this previous top, will increase. If market will fail to do this and turns to the downside action, so in this case we could get larger A, B, C top pattern with a retracement back to the 2570 area, somewhere at the completion of the XOP and so on. That's why this level is so important. Correspondingly, depending on what direction you would like to trade and what time frame you are trading, your conclusion will be different. So if you trade on the daily chart, you will start watching some bearish signs around 2650 area. Particularly speaking on the hourly chart, for instance, you could start watching here, as you can see, I don't know, some kind of the double repo pattern or something, or you could wait for a completion of this kind of the ABCD pattern, right? So the target should be completed to the upside, and it's actually market already stands here. Some kind of the OP also has been completed here. Maybe you will be watching for some bearish patterns. One of them might be kind of the double repo sell. So you can something is forming here. This minor grabber that stands also might be used as indicator. So for instance, if market based on this grabber will limit upside action just with a minor wash and rinse around the top, just this minimum target of the grabber, and then collapsed, that will be bearish signal, and that will be more confidence, more chances to consider taking short position with possible downward action. So for those who would like to trade on intraday charts and they have the bullish context, would like to make the bet on the possible upward continuation. In the current situation, since market already stands in resistance, you should wait for a bounce, for pullback to the downside. The first area to watch for is 2630, so with 30% support. Next one is 2620. There's two fib levels that you could consider. Correspondingly, If market will break both of them down, that will significantly increase chances on the possible downside continuation and chance on big ABCD pattern. So that's things to keep an eye on. So currently market stands in the situation where both scenarios are possible, and depending on what progress we will get in the geopolitical situation, especially in the weekend, it's really could determine the next step on the gold market. In the current circumstances, I would probably wait on the both sides, because on the bearish side, we do not have yet a clear downside continuation pattern, so it's not really clear yet what the reaction will be on the resistance. While for taking position a long time, on the long side, preferably is to get some retracement, because market right now stands in resistance, and the bounce here is absolutely natural price performance that we will get on today's session. Besides, once again, we will get the PPI. It also could bring some surprises. So maybe this time gold will show more proper reaction on the PPI, especially if it will be slightly higher, in the same way as the CPI numbers.